morning. You've tuned in Dubai Now, Sell Now on ET Now. I'm Mubina Kapasi. With me as always, Avan Dabas as well as Siddharth Bhamre. Markets looking good. Picking up cues from what we have seen in the US as well as in the Asian markets this morning. Though, of course, we have tempered off a tad bit from the day's low, but nevertheless, the buy seems to be in the green. The advance decline ratio is well firmly in favor of the advances, and the broader market seem to be rallying firmly ahead. We have the small cap index, which is higher by about 1.5%. Here are the top headlines at this hour. More updates when it comes to Fortis Health. Reports suggest that Manipal as well as Fortis will be meeting this week to approve the transaction between the two entities.
Meantime, check in on Deutsche Bank's report on utilities. They maintain a buy on NTPC, CESC and NHPC, saying that they see tangible evidence of a recovery. Tariffs have risen by 30% for forward derivatives, and power demand is recovering after seeing weakness for the last 2 years.
Carborundum Universal, there seems to be a bulk deal there. Reliance Small Cap Fund has bought about 20 lakh shares in the company. The stock in focus.
Watch out for some of the other PSU counters as the government is mulling forming an SPV of NTPC, PFC and REC, saying that the SPV will operate stressed assets.
And Capital First, the merger with IDFC Bank has received the nod of the NSE, one step further for IDFC Bank as well as Capital First.
But let's move on then to the SR Steel race, and it looks like the race for the most high-profile IBC account, that's SR Steel, has now hit a legal roadblock. April 2nd is the new window for the fresh bids, which have been invited by lenders, and meanwhile, both the shortlisted suitors, that's Numetal and ArcelorMittal, have moved the NCLT in Ahmedabad, challenging the rejection of their earlier bids. Let's get in Ashwin Mohan. He joins in from the center of all the action. He's right outside the NCLT in Ahmedabad. Ashwin, clearly this is being looked at as a test case for stressed accounts, and ArcelorMittal and Numetal are crying foul.
I'm standing outside the Ahmedabad bench of the National Company Law Tribunal, and this is where all the courtroom action and all the fireworks are expected to begin shortly in the most bitterly contested and high-profile corporate case under the Insolvency and Bankruptcy Code. I'm of course referring to the race for SR Steel, wherein SR Steel has a debt burden of around 45,000 crore rupees, and you have two high-profile bidders and suitors. Both of them have filed a case against the COC and the interim resolution professional at this court right behind me, challenging the decision to declare both of them ineligible to bid for SR Steel. And those two bidders, of course, are ArcelorMittal and Numetal. Numetal, of course, had moved the NCLT bench of Ahmedabad a few days earlier because they felt that the facts of the case regarding their submission of the resolution plan were not appropriately considered by the COC and the IRP, and therefore they had apprehensions. They wanted a specific direction from the NCLT bench in Hyderabad, directing the COC and the IRP that Numetal is indeed an eligible bidder. Remember, there's a lot of controversy around the indirect 25% stake held by the Ruya family in Numetal. And of course, on the other hand, if you look at ArcelorMittal, of course, got into a lot of controversy regarding its promoter holding in Uttam Galva. But later, of course, ArcelorMittal had sold its shares in Uttam Galva, and just a few days earlier, it did manage to get the all-important nod for technical declassification as promoters from both the bourses. That's the BSE and the NSE. But the reason why this case is turning out to be a test case is because of Section 29A of the Insolvency and Bankruptcy Code. And that's the all-important section which the government introduced to bar promoters of defaulting companies from bidding for assets under the IBC unless the dues were paid upfront. So a lot of important legal questions are at stake over here. This is a test case. Whatever happens over here, whatever decision happens over here, will of course be taken as a sort of a precedent by all the other corporate cases. And I'll of course be giving you all the latest from the courtroom action in the minutes and hours to come as the day progresses.
Ashwin, thank you so much for explaining this case in such an easy fashion, and clearly lot is to be waiting what exactly would be happening in terms of rebidding or how this case would go forward when it comes to bidding for SR Steel. Moving on with markets, 30 points for Nifty, bit volatile in today's trading session. We did see 65, 70 points uptake on Nifty, and we started on a decent footing, but we are seeing some intraday corrections. Most of the global cues which we are witnessing, we reacted yesterday because during markets we were talking about how Dow futures was up by 260, 280 points, and we substantially closed higher. And right now, as we speak, Bank Nifty is at the lowest point of the day, still 0.36, 0.37% up. Let's welcome Kunal Bothra and understand from him in detail that what exactly is happening in this market. Kunal, let's not talk intraday what's happening today or 1 or 2 days. Let's see positionally what's happening. And if you look at Nifty and Bank Nifty chart, positionally since last 2 months or 3 months, we are seeing lower top, low bottom formation which is taking place. Now we first bounced in fag end of February, then we bounced between 8th March to 12th, 13th of March, and now we are bouncing again. But in every bounce back, we are unable to make higher highs. This bounce back, is this any different than what we have seen in last 2 types? I mean to say on Feb end and also on second week of March. Is this bounce back different than that?
Well, this bounce back is not really different to that, but it's just that the Bank Nifty leading the way. Yesterday was one of the other stellar sort of positive signs. Earlier in the last 2 bounces, I think you had more participation coming from the other high beta sectors. So I think metal stocks till I think Feb end, they were doing pretty well. They were the ones which are sort of holding the ground, and start of March is where that sector sort of caved in terms of selling pressure. But now you're seeing this resurgence in Bank Nifty. So positionally, the fact that we have we're still making a pattern of lower highs and lower lows, I think is not a positive sign. Yes, the last 2-3 days we've bounced pretty well on the index, on the Nifty as well as on Bank Nifty, but that just adds only a short-term comfort to traders. So don't read it too much, as we were discussing even yesterday as well, that don't look at this rally as a game-changing rally. You need a lot of signs of confirmation. Yes, yesterday there were some positive signs which emerged, but you would need to see it over a period of time, and that I would believe would probably reinstate the fact that yes, the markets have bottomed out, and then you could look at a trend-changing rally. As of now, it's just a bounce.
And you're playing, with all buy calls, despite it is just a bounce, Apollo Tyres and SRF from mid-cap space. And interestingly, you're going long in ICICI Bank again. Last time we discussed about ICICI Bank, you were talking about that gap theory. Does that still hold, or now there are some other parameters which you are looking to generate buy call over there?
So I'll discuss first Apollo Tyres. That we discussed this stock even yesterday as well. It's a triangular pattern breakout for Apollo Tyres. Yesterday the stock was on the verge of breaking that trend line, but today's move of 2.5% has confirmed the breakout of a downward sloping trend line on Apollo Tyres. It was one of the fewer names in terms of tire stocks which was holding on to its 200 moving average, and now with this breakout coming, you could look at a start of a decent enough trend on Apollo Tyres. That's a buy. Targets remain at 285. Stop loss could be tailed to 265 now on the buy call. The second is ICICI Bank. Yes, I believe that gap indication which I had given last week as well remains on the stock. There was a 13-14 rupee gap which the stock had seen I think few months back, and when the stock enters into that gap territory, it acts as a strong a support zone, and that is what you've seen for the stock. I think the last 2 days we've seen the gap not getting filled. It's only partial filling of the gap, and the stock has managed to bounce back and touch back to the upper end of the gap. So I believe that the stock would now start a very short term momentum. So that's a buy with a target closer to 300, stop loss at 278. And the third stock is SRF. This is a stock in strong momentum. It's already confirmed a swing breakout as well on the daily charts. Targets of 2040 on SRF, buy, stop loss at 1950.
Let's also welcome Mr. G. Chokalingam from Economics Research and Advisory. Mr. Chokalingam, welcome to ET Now. I won't ask you, Nifty or Bank Nifty or market view from 1 year, 2 year perspective. We have been discussing time and again that from long-term perspective, market is looking good. Let's discuss about NBFCs. Now, today, there is a significant amount of correction in bond yield, and that is because of, FY19, the borrowing plan of government has reduced. Now, this has, bond yield positive in terms of, or bond positive because yields are correcting. In last 2-3 quarters, we have discussed and seen that a lot of commentary of market participants changed on NBFCs because interest rates were going up, and a lot of them also questioned the business model. do you think that declining bond yield would bring back NBFC as a preferred investment bet, even if not from a very long-term perspective, but from medium-term perspective?
Maybe in the short term, they may get a benefit and move up. But if you look at the valuation, some of these NBFCs like Bajaj Finance trading at 6-7 times book value, I don't find valuation comfort. You saw in the last 2 months the entire market cap got chopped off by as high as 17 lakh crore in a matter of 30-35 trading days. So, unless you have a strong valuation comfort, I feel you should not enter into these NBFCs. And also, the major concern for finance and banking is beyond this yield movement. Of course, yield movement can give you some relief marginally, but the real issues are, the credit growth in the system and revival in the industrial economy and all around improvement in the service sector growth. We are still growing at around 8%. We used to grow the service sector at around 12-13% long ago. So these are the key important points for driving up the aggregate demand and improving the credit in the system. So I would not venture to chase these stocks at such a high valuation.
Okay, that's the advice coming in. Let's get on board all your viewer queries. And remember, if you have any, do reach out to us. Pranay Desai, first up, has a question on Avanti Feeds. He's bought shares of this counter at a price point of almost 2,400, 2,395. Is it advisable, he asks now, to hold on, or should he book out of the company? Well, let's understand as to how he should exactly approach Avanti Feeds, currently trading at about 2,200 thereabouts. And this stock hasn't had a fairly strong trajectory, Kunal. Over the last 1 month or so, it's not a very liquid name, but nonetheless, it had seen a bit of jagged edges. What's the best advice for someone who's picked it up around the 2,400 mark?
I think you're still not losing a lot of money, and the stock is in a very strong uptrend. So yes, it was one of the late movers, in terms of the price rally in the last 1.5 odd year. But nevertheless, the kind of price moves the stock has seen, gives an indication that it's trying to go into a multi-year uptrend. The last 3-4 months, the stock has remained sideways, and in terms of chart structures, it's come back and sort of retraced back to its 200-day moving average, which I think it tested just a couple of days back. So I sense that this mean reversion process now seems to be getting over for stock like Avanti Feeds, and now you could look at the stock restarting an uptrend. So if you have a long-term horizon particularly, then I believe you should hold on to your investments here.
All right, hold is a call coming in from Kunal. Yes, for the last 2, 3, 4 months, there may have been a bit of choppiness seen in the stock, but nevertheless, it's a stock that has really been able to create a huge amount of wealth for long-term investors. Mr. Chokalingam, what's your rationale? It's a hold call on Avanti Feeds. There was certain concerns in relation to US imposing high duties from on shrimp exports from India to the US. Is that any sort of concern, according to you?
Yeah, in the long term, that concern remains. Because if you see last 2 decades, the export business of shrimp and other sea-based product, it has been very inconsistent because of the regulatory issue. However, to be fair to the stock, it has done phenomenally well in terms of consistent growth in profit and revenue, and it still trades at around 17p on 1 year forward earning. Considering the recent growth, I would suggest hold with a target price of around 2,500 rupees.
Okay, so it's a consensus whole call from both of our experts when it comes to Avanti Feeds. Let's bring on board our next query. We have Vikram Chidgupkar, who is joining us, in fact, live on the phone line right now. Vikram, hi, good morning. Thanks for calling in. What's your question?
Yeah, hi, good morning. I'm holding Havel and Parag Milk for quite some long time. I'm a long-term investor. I have already booked some profit in Parag Milk as well. So I want to re-enter into those stocks from long-term perspective. So what would be the perfect level to buy these 2 stocks, as for short-term also and for long-term?
Already exited your investments in Havells as well as Parag Milk?
No, I booked partial profit in both of them at a higher levels in the month of January, and I have kept the remaining 50% shares with me. So I want to buy more again.
Wise call then, because Havells certainly did see its recent high in January itself. Kunal, if you look at the longer term chart pattern for Havells, it's really not done much. It's just been a stock which has just been very range bound, at least from a 1 year time horizon. He's booked partial profits in January. What is your advice for the short term?
No, I think you should get back into your investments. Especially at a time when you're looking at a benchmark Nifty correction of almost 10%, and most of the mid cap small cap stocks have already corrected 30-35% odd. I think this is a good enough time to sort of enter, or maybe relook at buying what you've sold in terms of partial profits. Both, I think, for Havells, I think has been on a structurally very strong uptrend. The last few years, the subtle nature of the stock, the steadiness of uptrend suggests that this uptrend is here to last for a longer duration of time. And these mild periods of correction, more in terms of time correction rather than price correction, should be taken as good opportunities to buy back the stock again. So I believe Havells should be bought into at current levels, and you can hold on to it from a longer term view. Parag Milk also, the fact that it's a recently listed name and has limited chart history, but nevertheless the levels the stock is trading at currently at 250 odd, I think is a very strong support zone for the stock in the very near term. And I would sense that the stock would probably try and retest the previous swing highs closer to 300 mark. So if you've already exited this stock also in the month of Jan, then I think you should look to buy it back again, because the stock is trading at extremely strong support levels, and there could be a very high probability of it testing 300 again.
Okay, that's the outlook coming in on both the stocks. Let's also understand the fundamental setup then. Havells, and how are you looking at this story, Mr. Chokalingam? Do you believe that the business model is robust, that we can see a follow-through of the activity? He's bought it at about 450. And Parag Milk, what is the long-term story here? Oh, I don't think we can reconnect with Mr. Chokalingam. A bit of a problem there, but for now, take on board the advice that Kunal as well has given. He believes that you should hold on at the current price. By the way, Mr. Chokalingam is also bullish on Parag Milk. He says hold on with a target at about 280 rupees.
Hello and welcome back. You're watching ET now. Markets near to the lowest point of the day, just 19 points up on Nifty, and Bank Nifty too, just up by 77 points. Pressure point from unusual suspect like Bharti Airtel is down by more than 2.5% point. We are also seeing some of the two-wheeler names like Hero MotoCo and Bajaj Auto are a bit soft. And yesterday's star in terms of contribution, HDFC Limited and HDFC Bank are showing some signs of cooling off, and that is leading to pressure on market at this point of time. Let's also welcome Manas Jaswal into the show. Manas, you are giving all buy calls, despite we are seeing some intraday correction in market, but you're opting for mid cap names. Though Biocon, I won't say completely a mid cap stock, but that stock has shown a decent move today. Chola Investments is one of the NBFCs which are or NBFC at large are doing well. Chola Investments is doing quite well in that space, and even Kunal was bullish on SRF just some time back. What exactly are you observing on charts?
Siddharth, in Biocon, we have already seen almost 70-80 rupees correction recently, but now it seems that stock has a lot of support near to 550-560 mark, and today we have seen a lot of buying interest. Volumes are good. The stock has already broken the resistance of 585 on the daily charts. So I think the possibility is very high that it can again test its previous high, and so at least for next 1 or 2 trading sessions, you can set the target of around 620. Take a long call here. Keep your stop loss below 590. Secondly, the buy on Chola Finance. Some NBFC stocks are still looking very strong on the charts, and Chola Finance has already broken the resistance of 1475 on the daily chart. And on the weekly chart, I think this is a flag breakout, and after this breakout, I think you can see almost 100 to 125 rupees up move in Chola Finance. So here the target would be around 1565. Target stop loss should be 1470. Last one is a buy call on SRF, where now it is clear that the stock is making higher tops and higher bottoms on the daily chart. The stock has already broken the resistance of 1960 today, and now I think it can again test its previous high of 2050. So for next 1 or 2 trading sessions, you can set the target of around 2025. Take a long position here and keep your stop loss below 1950.
Okay, and let's move to some wealth creation ideas at this point of time. Mr. Chokalingam, GIC reinsurance business, that is RE, GIC RE is your buying. We don't talk about the stock much, and it has a trading history since October 2017. So not much, we know from technical perspective also. Throw more light on this stock, that why exactly you are giving a buy call over here. Then another mid-cap stock which you have a buy call is Nesco. And interestingly, you are suggesting to buy MRF with a, astonishing price target of 1 lakh rupees per share.
Yeah. I will take a MRF first. In fact, in the same channel, when the stock was around 8,000, I gave 36,000 target. Temporarily when I went wrong, I had a lot of stress. Still I venture to give a 1 lakh target. I am very firm on it. Just as a disclosure, we have also invested personally in MRF. If you look at Ultratech, when the turnover was less than 10,000 crore, it used to command a PE of around 10. Now, when the turnover jumped to around 25,000 crore, even the trailing PE went up to 40. Now, MRF is a company where it has got a strong brand, and it is the only major tire company to have net cash. All other tire majors have a lot of net debt. And it took 50 years for MRF to get 5,000 crore turnover, but in the next 10 years, it tripled the turnover. Now, first time, it has increased the gross block by about 75% in the last 5 years, and spending another 4,000 crore for massive expansions. Now, auto sales are robust. The rubber prices are down 18% year on year. In fact, Thailand is reportedly increasing the output and increasing the exports. So the moderation of the natural rubber would compensate for rise in the synthetic rubber price. So there are so many other points which favor MRF at this time. I think it's a very inflection point. Now from this level, it should easily go to 1 lakh rupee target in the short span of time. Now, second idea is GIC reinsurance. If the stock is down around 17% from the listing price. Also, this full year in 2018, I am expecting a lot of volatility in the market because of uncertainty from political front, protectionism, monsoon, so on. So I thought it is better to have one large cap stock like GIC Insurance. Also, fundamentally, I like the stock because whether you take a CRISIL or Moody, they are all talking about robust growth outlook for insurance business. Already, both life insurance, general insurance posted 17% growth, and in terms of valuation also, it is available at 2.8 times price to book value. On 1 year forward, it is just to 2.5 times. It is doing underwriting business in 160 countries, and it is planning to increase the international business to 40% of the total business. So all these developments gave me a lot of comfort on GIC at current price. Finally, Nesco, I believe that this is a very attractive stock because they have got about 70 acres of land on highway near Goregaon. And the beauty of this land bank is that unlike other companies where the land bank is dormant, here constantly and consistently, the management is utilizing the land bank to expand the core service businesses like exhibition center and IT parks. Now they are proposing 5th IT park and exhibition center also. They have planned a 700 crore expansion. They already set up 2 food courts through only one subsidiary, and they are planning to set up a hotel inside the land. So many things are happening, and strong balance sheet, zero debt, 500 crore cash, and you are getting only around a 20 PE, despite such a land bank and cash. So all these, give me a lot of confidence that in the next 2-3 years, our management would utilize a lot more surplus land available to expand the existing service businesses and increase, thereby the wealth creation opportunity for the stakeholders.
Okay, well, a lesson as well to be learned here. While Mr. Chokalingam too was a bit under stress when MRF did not perform, patience, of course, was the key, and that's, of course, what investing is about. Well, those were wealth creation ideas. Let's bring on board some more viewer queries. We have Raghav who has sent in his question. He says he has bought shares of Dhampur Sugar. He's bought it at 171 rupees per share. He wants to know if he must hold or sell. Well, sugar stocks for one have certainly been having a tough time in the last 6-7 odd months. Recently, there was some news flow as well pertaining to how sugar production firstly is expected to be higher. Secondly, the customs duty has been brought down to zero, export duty has been abolished, so there is a probability that sugar prices may not be at a higher level going forward. And take for example Dhampur Sugar itself. It's a stock that's corrected to almost half from its levels of about 320 odd that we saw in the end of 2017. Mr. Chokalingam, what's your view on Dhampur Sugar?
I am negative on sugar sector. I believe that the pain is not yet over because the 49% anticipated jump in the India's sugar output definitely will give more pain. So one has to wait probably around 18 months. That is next festival season in 2019 to really make big money in sugar stock. But still, I would suggest him to hold on to Dhampur sugar because interestingly, the power, chemical, and ethanol segments put together accounted for 57% of the total profit, if you take the latest quarterly results. So that gives little comfort on the stock because even if sugar, makes only break even or minor losses, still there is a staying capacity for the stock because of significant contribution from power, chemical, and ethanol. And as I said, the sugar cycle would definitely turn around by Diwali 2019. So therefore, he can hold on to the stock.
All right, that's the outlook coming in on how you should look at the fundamentals when it comes to Dhampur Sugars. But would be interesting, Manas, to give us a sense as to how the stock has been mapped out over the last 1 month, 1 year, and whether or not you think it's a prudent strategy to stay invested. If not, would there be any other options within the sugar space that you like?
See, entire space is looking weak on the charts, and most of them are making lower tops and lower bottoms on the daily charts. If you see Renuka Sugar or Balrampur Chini, Dhampur Sugar, all are making lower tops and lower bottoms. So I think here the trend is weak. Possibility is very high that Dhampur Sugar can come in the range of 110 or 120 soon. So I think any rallies towards 100, 150 to 160, that would be a great exit opportunity from the long position in Dhampur Sugar. And I think now, if you want to create long position in Dhampur Sugar, then you should wait. Only if it breaks 50-day moving average right now, which is placed near to 180, then only you should create long position. Otherwise, just avoid this entire space.
That's the outlook coming in on Dhampur Sugars. Manas, you believe that Vidya Telelink, oh sorry, that was Mr. Chokalingam's outlook. But Manas, if it's a sell, would there be anything else that you would advise? I don't know if I missed that.
See, I think one can look at some auto stocks, especially Ashok Leyland, where the long-term trend is quite positive. Even on the short-term charts, stock is making lower tops and higher tops and higher bottoms. So I think we have already seen some correction in last 2 weeks' time. And even any correction near to 140, 135, that would be a great buying opportunity in Ashok Leyland because if you're talking about next 6 to 8 months' time, I think you can set the target of around 175 to 180. So take a long call in Ashok Leyland on correction near to 140. Keep your stop loss below 125, and here you can set the target of around 175, 180.
Okay, though that's the call coming in, Dhampur Sugar, and of course what stocks you could consider buying instead of that one. We'll take a very short break, but coming up next, we'll be addressing queries on Cox and Keynes as well as Titagarh Wagons. Don't go anywhere.
Welcome back. This is Buy Now, Sell Now. We're answering all of your stock queries and getting you the top recommendations. 10,149 on the index. Ram Gopal Dusi has connected with us from Hyderabad. He's got 30 shares of Cox and Kings at 191 and he wants to know what is the view for the short as well as the long-term time horizon. Manas, do you like Cox and Kings? What targets and stop losses would you advise him?
The Cox and King is moving sideways for quite some time and stock has a lot of support near to 210. So I think he can hold it, keep your stop loss below 210 on a breakout above 265. You can set the target of around 325 to 335.
All right, that's the view coming in on Cox and Kings. Manas is advising that you can hold on. In fact, Ram Gopal Dusi has one more question. He says he has bought 50 shares of Titagarh Wagons. He's bought it at a price point of 114.8 rupees per share. He wants to know what's the view for the shorts as well as the long-term time horizon. Manas, it's a stock that we don't discuss very often. It's a stock that has actually slipped quite a bit as well in the last couple of months. What's your view?
See, on the charts, clearly the trend is weak. The stock is making lower tops and lower bottoms. I think he should keep the strict stop loss below 105 because on the medium term chart, stock has some support near to 105. If it breaks that, then definitely you can see almost 30 rupees correction from 105. So I think this is a weak chart. He can hold it, but keep the strict stop loss below 105.
Manas is advising that you should consider holding on, whereas, by the way, Mr. Chokalingam has said that Titagarh Wagons is a sell according to him and he would instead prefer an Indian bank. Manas, thanks so much for joining us and helping us out with, all of our viewer queries. Mr. Chokalingam, I'd like to take the opportunity to thank you as well. Those are, of course, all the queries and questions answered. Very quickly, what are brokerages recommending in terms of technical picks this morning? Angel Broking has a buy on Sun Pharma, target 540, stop loss 488. Motilal Oswal has a buy on HUL, stop loss 1306, target 1360. And lastly, we have Kotak Securities, which has a buy on Jet Airways, stop loss at 620 rupees, target at 670 rupees. Those were, of course, all the technical recommendations right here on ET Now. But, of course, in the IPO corner, we're going to be in a short while connecting with Bandhan Bank as well. For the markets, for the meantime, 10,150 is a level that we may just as well breach in just a couple of minutes now. It's just now 20 points higher for the Nifty. So we have ebbed off quite a bit from the day's high. Sensex is higher by about 40 points, but the small cap index holding on to gains. Chandrasekhar Ghosh, MD and CEO of Bandhan Bank, in conversation with Poonam Sani. Listen in.
If you see that the growth is in our DNA, and the scale from the beginning, I have been the feel that it is need for our country, because the large number of population are not reaching to the financial services. So it has been helped me to understand how we can be reached to the more people with a very simple product and financial product and services, which can be helped to change of the people's life on that. So that inspiration helped me to reach now 13 million customers.
Right.
So like to continue in this way to meet this level of the people's demand on that. So it is an unlimited area on that. In that sense, we say that as of now, 1,20,000 crores credit in a microcredit segment, including bank, MFI and together. There is another demand of the 5 lakhs crore. If we like to 50% of the people of our country can be 50% of the family if we like to reach. So it is an unlimited. Only issue is there, the reaching to these people, build up the dedicated people, team, and very efficient team member.
Right.
So it will take some time on that, on the basis. But Bandhan, you know that the 28,000 employees, out of that 19,000 employees work in a microcredit level. So growth in that and scale in that is not a very big issue for us to continue whatever we have been done, perform in a previously. If you come to the non-microcredit portfolio, there is a very big segment. The two segment is a very big, as a demand is there. Which is one is we called the MSME, but we have developed in one product called the SCL, Small Enterprise Loan, which is 1 lakh to 10 lakhs, which maybe someone has graduated from microcredit to this level, or maybe literally some of the good businessmen have not yet come to the microcredit. They also have need in this amount of that.
Right.
So
allow me to interrupt here. How do you see this loan mix then between the microfinance book, small enterprise loan, and the SME book? How will this entire loan mix shape? Because nearly around over 80% of your book is still to microfinance, and also the other concentration risk is that you are present in Northeast as well as Eastern India. How do you mitigate these two concentration risks?
No, if you see that the microcredit as of now, 88% is a microcredit of total credit, and 12% is a non-microcredit. And credit is demand. Is a small credit is big, strength of us is big, so that we like to continue on that way, whatever the growth will come. Out of that 88% of my credit, whatever my 76 lakhs is the microcredit borrower, 73% of this customer are only one loan from Bandhan. So that is a strength. I like to continue in that one. If you say that the 12% non-microcredit, 3% is the retail out of that 12%, and balance 9% is the MSME.